Hi, I'm Peggy Beauregard. We are the real estate matchmakers. We match cash to deals and deals to cash. We save you time and you make money. The deals come to us, the returns go to you. We are talking about how to not pay your fair share of taxes. And this series is about how you will end up also not paying your fair share of taxes. I do like to let you know different ways that people get to save on paying taxes. This is about business people and entrepreneurs who have, by the blessing of the IRS, ways to pay less in taxes. So they get to take, that's called cost of goods. It is the expenses they have against the business. So they have, if you are an employee, you get written off. So employees, the rent on the property, the utilities, everything inside the building that's an expense to the entrepreneur or businessman, woman, is a write-off. So they write it off against their income that they receive. Now, there's also inventory. So if you're a retail store or a grocery store, you have inventory and you have to count your inventory, and it's supposed to be on the last day of the tax year, which is very different for many different companies. And they have to report what their inventory is. So those are things that they get to write off. And then there's something called depreciation. So if a company, service company, for instance, has desks, the desks are depreciable. If you're a direct salesperson, you have an automobile that you probably use for your sales, and that automobile is depreciable. Big machinery or any machinery is depreciable. Everybody who's using a computer, that computer is depreciable along with the printers and all the other equipment. All of that is depreciable, and depreciation is one more tax benefit. So you have a depreciation, and each thing qualifies for a different length of time. Real estate's 27 years. I don't actually know what the others are. My CPA handles all of that. And so a desk has a certain number of years it's good for. And what you're doing is you're depreciating the life of that particular item. So those are the things that they get to write off. The Congress set this so that businesses could write off these expenses. And that is what all that is about. Direct sales, I've covered that. Entrepreneurs and business people. So it also doesn't matter whether you are like a grocery store chain or if you are a small business person. You still get those write-offs, and you should be talking to your CPA about that and your bookkeeper. Most bookkeepers will tell you exactly what you can and cannot write off. So next we will be talking about another risk reward that reduces your taxes so that you also are not paying your fair share of taxes. And this will be for the W-2 person, the employee.